let's try to start this YouTube stuff here. So
Yes.
just to see if everything works. Okay, I think we will be live in a minute.
Cool.
In a minute, let me have a look here, just to switch.
Good settings. I like your settings. I'm
Good
still too
settings.
lazy.
I
I like your
Oh,
settings. I'm
yeah,
still
good
too
settings.
lazy.
I
I
got a
like
quick
your settings.
scalp on that short on ES there.
Were you long or short? Because I bought it on the bounce, which you just posted, and I'll be honest, I put my hands up here. There's no. I'm looking at my charts. There's no real signals. There's some obscure VWAP on ES, but I took it on NQ.
Oh, there was a strong
this.
ice, but I literally had a minute because the news was coming out, and it's just come out. 200K jobless claims actual.
Yeah, I think tomorrow I believe that the market will be a little bit in a state of waiting for tomorrow, because tomorrow we will have NFP, non-farm payrolls announcing, and that might be slowing down the market today. We will see that after the day. But anyway, let's start with our broadcast here, TTW and Friends, and welcome to everyone here in the channel and who is listening or watching us here on the screen on YouTube. I'm really happy to be with David and Moby today after a break. It was necessary, but anyway, we are still alive and we are enjoying our life here on this channel. Thank you for that.
Good morning, good afternoon, and good evening, everyone.
Yeah, good morning. Yes, good afternoon. Good evening. Oh, we are to Australia. So Moby is from Australia.
It's 8:30 in the evening.
Oh, great. So you're enjoying, heading to a new day very soon. But anyway, the highest motivation regarding being in the trading arena nearly every day for me is the contact and conversation with traders around the globe about trading, their ideas, wishes, and concerns. And I appreciate that because it shows me that we all have nearly the same challenges, the same dreams and hopes to master trading to a certain degree and make a living of it. So as I mentioned, I'm really happy to have my friends here around me, Moby from Australia and David from UK. Hi, welcome back to our broadcast here, and happy to be with you. I see you in the trading, into our trading room, TTW Trading on Discord. Every morning you are trading NQ futures as well and as ES, and that's really quite interesting to watch what you see on the chart. Today I would like to start with something I've presented on Tuesday this week. Yes, 2 days ago. I would like to tell something about the discovery we did as a TTW team, and we added to the TradeFinder. And let's discuss about that, and then see how our discussion will evolve in other stuff, what we see on chart, what you see on chart, and so on. On Tuesday. It was quite remarkable. I lectured, I presented the order book imbalances in the book, and one of my discoveries, or not my discoveries, but one of my perception I did over the last years was that the order book was never really an important part for most of all traders here I know. So I was just insisted to have this order book on my chart here to explain and to get a lot of things explained which are not visible on a normal chart. I'm seeing around, I'm in different rooms, I'm following other colleagues, and I'm really astonished that the order book and its let me say mechanic is not a serious part of the trading. So we are all focused on VWAPs, we are all focused on volume profile, we are focused on volume nodes high, volume nodes low, and so on, all this stuff. But I have rarely seen a colleague, trading colleague, utilizing the order book really intense. That means to say, okay, we have a liquidity there, we have a liquidity there, and that means we have 400-500 contracts sitting on a certain price. And by the way, that was simply because I admit openly, I'm saying I'm outing myself. I was with Jigsaw, with Peter Davis since 2000, I don't know, 10, 11, 12.
Okay.
when I was in UK, and he started the Jigsaw Trader with Ninja Trader 7, I think it was, and it was really affordable to see an order book. And the point was, all over the years, I think one totally underrated concept of trading is the order book imbalance. That means if you are an high HFT developer, HFT developer, so a very hard word, then most of the HFT developers are looking where should they put the trades on, where should they look for better prices, for lower prices, for higher prices, for example. And they are using the order book imbalance, for example, in one of their, or as a part of their logic, as a part of the algos. And therefore, I think this imbalance line is quite interesting. If you go back, if we go back to yesterday, and yesterday was a quite remarkable day because the market started from the beginning of the sell-off. Let me have a look if I can slide it.
Yeah, it did while you slide. I mean, if I chip in with a couple of thoughts, I think a lot of, I started as a retail trader, as I've said before. I didn't have an institutional trading, though I have worked in banks. But I think often a lot of retailers, when you start, you haven't got that depth of market on your chart. Now, that might be because the package you're using, it might simply be like I was just paying for level 1, and the thought of paying for level 2 was a lot more money.
Yeah.
And it took a while until I was, if I say convinced, but understood what level 2 was about. So those things are definitely against you as a retailer, for sure.
Absolutely. Yeah, that was my. By the way, I think everyone starts with a certain kind of knowledge. Everyone must start somewhere, and as you mentioned, yes, absolutely, we are starting with level 1, with level 2, even if we can could afford with level 2, and that's where we all started. But I think we should take the chance and to change our mind and to overcome our behavior, old behavior, or how to say, let me find a word for that. It's behavior. I'm missing the word right now, but anyway, when we are in a scheme, or when we are accustomed to something, it's very hard to change, to make.
Change full stop is always very hard, and the longer you are at trading, the longer you practice one style.
Yes,
it's become harder to change.
Yeah.
I've come across order imbalance for the first time from an institutional oil trader who used the Sierra chart.
Okay.
Market depth historical, and he opened my eyes a lot to how they can push a thin market around from very, very far away. So you'd think that that it's only the first 10 levels, the first 20 levels, but you'd be very surprised when you look at oil. It's a completely different game when you have something as visual as Bookmap, and you can zoom in and out the way that we can.
Absolutely, and today, right today, maybe two hours ago, I had a chat with a trader who pinged me because of spot gamma and so on. And the point is, what we want to we want to have at least one answer to the question where's the market heading to? What is the market doing? So if we know that, then we can enter the market maybe based on our risk portfolio, risk behavior, whatever we have developed. Everyone has his own a style of trading style, of course, and then that would it be. So the question is, and that's simply amazing. We have discussed it in our TTW team for a long time, how to implement that, and the imbalances, the order book imbalances, answer one question really satisfying for the most instruments is, where is the market heading to, and how do I know where the market is trending, or is the market trending, or is the market not trending? Look, that's the sample of yesterday here, when the market started to drop off here at 75 or whatever, the the order book imbalance was permanently on the bid, was on the bid, was on the bid, was on the bid. And you're right, David. It's more comfortable and visually acceptable, better visualized with Bookmap than maybe, and not maybe, but than with a candle chart or whatever, to see this behavior here, to see that. So I've added yellow and blue. Just
nice.
yellow
Nice.
is about above 0. That means if yellow is above 0, that means the imbalance is on the ask, and if my blue line is below 0, then the imbalance is on the bid. And if the imbalance is on the bid, then it is most likely that the market will trend on the down. Yes, in this case, on the bid side, or down. And as you can see yesterday here, that was a quite nice point where we sat in the room, or we discussed in the room, stay on the right side, sell, short this stuff, and squeeze it wherever you can, because at that moment, until it was in the evening, my time here.
Yeah, after lunch, after US, after New York lunch,
yeah. Then the market decided to reverse and then trade back here. But you see as well here, when the market traded back and found the bottom and 75 or whatever here, what it is, then the imbalance was on the ask, but it was not so overwhelmed. It was not a big imbalance. And that's quite something really which is maybe not known. I don't know, Moby and David, if it is, that might be something because you can't rely on that for liquid instruments. That means it answers one question. It is, I'm saying very openly, it is one tool in our toolbox for trading. It's not the tool. It's not the holy grail. It's not something we have invented. It's very something totally new in this on this planet here. But it's one tool which can guide us through the day, where we see simply the market is on the bid.
It's giving you that sort of direction of the wind.
Yes,
as an analogy. Now, yesterday if I chip in with that, I guess you like we all do, we restart our Bookmap every day or so, or sometimes twice a day.
Yeah.
At the start of New York yesterday, there was a lot of ice coming in, some really big ice numbers, and I think I probably lost 2 short trades. I was blown out, 3 handles gone, 3 handles gone. I was getting quite angry by then, but I did get in again with not as much weight, but pretty much at the top. So there were really good signals, but I do run a lot on my chart, as we all know, and I often rightly tell myself off on that, Walter. But yeah, yesterday was and I think the day before as well, the TTD signals were in there. They were showing the ice coming in. You could see that it was a group of actors, because it was being joined up as well. So it was great. I love to trade from the open. I know I've said that before, and I know not everyone does, but I often find if you're bold and brave, you can, and I was pretty much done then after that, because we nearly dropped 100 handles.
Yeah.
as your chart showing.
Quite amazing. Yeah. The only thing I'd say that on thinner instruments like NQ and certainly trading the non-RTH sessions, you can use it the other way as well, Walter. You can use, when the imbalance becomes ridiculous, you're in for a reversal.
Yeah.
Yes.
And in NQ, you can do any of those levels. I've been using your levels up to 80, and when it gets the imbalance gets on your reading up to about 120, or minus 120, you're almost guaranteed a great reversal.
Yeah, absolutely.
And we had one of those today with a major liquidity break, which came out of nowhere, and it happened to coincide with that too.
Yeah, I'm just looking what is happening right now in NQ, because NQ, I know Moby, you are trading NQ in the pre-session so far, I know.
I mean David used to as well, but it's just you get some reward. I mean, it comes with a lot of risk. But boy, does that thing, get going, and if you can catch a little momentum trail on that one, you just, what I tend to do is I manually trail the stop behind it, because you just don't know how far it can go, and it will usually go a lot further than you think.
Yeah,
it can. This morning, I'm thinking Moby around about, I'm going to say 10 o'clock my time as a rough guide. There was a good 50-point move within short sticks upwards on NQ.
Yeah.
Just, and not a lot of great signals either, except for me, as all of you now got used to. I always look at the Euro 50 on my C Trader. I know, Moby, you're a big fan of following the DAX, and that was getting charged up. My Squawk wasn't on today because in the UK there's a holiday, and if that's something I think to shout at. I do see that in the rooms, which is fine. As we were starting, we were talking about the various US jobs figures. We talk about NFP tomorrow. As a 101 for all traders, you really do need to keep an eye on those news events. Whether we believe they're real news or they're fake news is another thing. But when these reports are coming out, they are a great opportunity to follow the pack, etc., etc.
Yeah, absolutely. Yeah, absolutely. So yes, I think we can encourage everyone to have what do you use? Squawk Box. I'm using. Let me see.
You're using Financial Juice.
Financial Juice, yes. That's what I'm using.
Amar's a friend of mine. He's a good bloke.
Excellent.
Good service.
Yes, absolutely. So that should be a must, because you are really on the point at the point when the news comes out, and you see that sometimes when you understand the markets, you can sometimes the market drops. Like I think it wasn't it yesterday we have had an announcement, or wasn't the day before? I don't remember anymore. When we have had an announcement, I think it was Wednesday. Or Tuesday. I'm not sure. It doesn't matter. We had an announcement, and the market drops down for, I think, for 20 points, and then we get a volume stop, and the market rushed up for 30 points again. So equalized this fast down move and so on. That was quite amazing to watch how that happens.
It is. It is.
Moby, just maybe I can add something to what you mentioned, Moby and Dave. If you watch a little bit more consciously this imbalance line, then it will give you a little bit more, no, not a little bit, but another information how the market will most probably act. That means if we are above the zero here, yellow line, that means the imbalance is on the upside. I must say that there's a kind of limitation in this kind of watching the order book. If you are trading or dealing with an illiquid and thin market like NQ is, look here, we have a market volume 50, that means nothing, and the average liquidity is around 4 or 5. That's really extreme thin market. But when it moves, then it moves very fast in your favor, hopefully then.
But I don't trade them in isolation. I mean, I have these giant screens for a reason. So I've got like equivalent of 2 HD screens on the ES right next to 2 HD screens on NQ. So, I mean, I think, having used Bookmap for as long as I've used it, I appreciate more and more the vertical space. So I've, if I do any streaming, it should be interesting to see how I stream that to the world, because a lot of what I am looking at is not in a nice little widescreen.
Yeah, that's great. So by the way, Moby, when you see, I like the idea you brought up, Moby and David, to stream your NQ sessions in the morning. In the morning, I mean European time. So it's afternoon in Australia. So, but maybe in the night and very early morning. For
no, we just stream a 1 hour session, and it doesn't matter whichever is the market that moves. If it's ES, we've got them both up. We'll switch screens and
that would be great. So folks, we will do that, because that's simply an amazing experience idea to see other traders watching and interpreting and reading the market in the pre-session, which I'm saying always to those who, when I'm talking, I think the pre-market, European pre-market, is a little bit more calmer. That means it's, I wouldn't use the word secure. It's not so, there's not it's not high volatile. It means we can sit back and watching the market, right, goes up, goes up, goes up, and filling our account. That's what I wanted to say. In the pre-market in Europe is a little bit more quiet than when the main session, the US main session starts. That's simply sometimes it's boring, but sometimes it's excellent. Yeah, what I just wanted to add based on this imbalance, just to add this thought as an additional tool, ladies and gentlemen who are listening, and as well here we are in a talk with our friends Moby and David here in our broadcast, to using the imbalance line, because the reason for that is that excuse me, let me say following. When you are reading literature about trading, and when you are reading a lot of papers, then you will read about informed and non-informed traders. That means retailers usually are not informed, so they don't know whether they are news or they are not well informed about, as you mentioned, David, about the level 1, well, level 2, what it is, it doesn't matter how. Mainly they're looking candles and they're hoping that they will get some share of whatever they want. But retailers are usually non-informed traders. And the other side, we have so-called informed traders. These are institutional traders, simply, who are really well armored. Let me say that this well armored. Yeah, it's a little bit harsh, I think, but anyway, they are very well prepared for the market. They know what to trade. They use algos, they use TT technologies, they use other techniques simply to make the share. They're using, of course, they use options as well, and so on. And what we see in the book, or what we can see with Bookmap, for example, is how they are behaving along the trading day. Look here, that's quite important. That's quite important, how to say, information. This clear cut here at 41.50, for example, here. That means there's no interest anymore for this or this party or whoever it is to trade into 41.50. So they cancel their liquidity there as well here at 46 something, 65 or whatever it is. So this is an incredibly worthwhile and helpful information for us to understand what the big guys, the big ones, the big five, so might be doing here in the market for us. So to read a market correctly, and what the imbalance line is simply doing is measuring this upcoming adding and canceling of liquidity all over the order book, and inform you, and will stay informed and always on the right side. If you see that coming down or trading below the blue line, or excuse me, the zero line here, you will get a signal here. And then when you think it fits your, how to say, trading strategy
or setup. Yeah.
Yes. If it fits your strategy, then you get an additional signal, additional tool, which confirms, okay, yes, you might be right here if you go short. And that brings you some yes, not only good points, but the success rate of your trading. And the second one, you will see that as well here. It's peaks a little bit above before. That was a sweep here on NQ, and then it turns back here. It was negative. It's really hard. That's we must know, and I will present in the next sessions and educational sessions about volume and liquidity. It's really hard to adjust and to fine-tune that for really thin instruments. It's not a fault of the indicator, but you must be very aware of the liquidity and the volume in the market to find the right settings, and which will guide you all the day, the most part of the day, to the jungle of trading.
Mm-hmm. Yeah, it's like learning a different language for a different symbol. But your points on imbalances apply equally, in my experience, to stocks and to crypto as well. So
yes,
yeah. I mean, I know you both have lots of stocks up there on your book map. So
we do.
yes, sure you could pull up an example maybe later in RTH, but some of those stocks aren't the best because they just have defined liquidity at nice round numbers that you tend to ignore, but others are much better.
Yes, of course. For example, Apple, if you look at Apple, I have a little bit different. Yes, I have stocks which are trading. I've canceled it because it's too much on my chart and as well my PC performance. But there are stocks who, like Apple, Microsoft, and so on. They have a lot of liquidity around, so you can adjust it very well to them. There are stocks really not worth being. Yes, it's very hard to adjust them here and to get really good signals for that. As well, the limitations of this technique is simply if I don't know if I can show that on UB. You see this UB, for those of you who are a little bit more don't know, but anyway, is the ultra bond, bond, and very nice. By the way, very nice instrument to trade. Very nice instrument to trade. If you are patient enough, or you can be patient enough, who knows?
We try sometimes.
I would suggest trade bonds. It was awful trading them years ago because you know it's one fractal. It's a one fractal. It's not a one tick. It's a one fractal.
Yep.
It took maybe 10 minutes to move. Up or down.
They do.
Yeah, that's really something only for those who are patient. But anyway, the biggest advantage is the daily margin is extreme low. I don't know what it is at the moment, but at my time it was $1,000 for one call. It was cheaper than every ES Mini, and you got a fill and an entry and exit at any time. So it wasn't you haven't had any slippage, and in this instrument that was really the beauty. And one fractal is $32. $32.65 or something like that, and that's quite interesting. What I just wanted to point out are the limitations of those imbalances or order book imbalances. In cases you see this, well, it's not scattered, but this small liquidity changes, constantly adding and canceling, adding and canceling, adding and canceling over the maybe 14th.
Fast fingers.
Yeah, that's really hard. These are limits where we can't do very much because the liquidity is there as it is, and we have to accept that. That's TradeFinder, any other indicators are not, unfortunately, not the holy grail, as you know. But anyway, that might come to a limit. So if you're trading ultra thin stocks or something where the liquidity is simply not very clear as it is on for the ES, and later on, I'm sure for NQ as well. That gives you much better, I would say, security and confidence that you can rely on this kind of indications.
Oh, I like it, Walter. I've just been clicking the imbalance line back on my stocks as we've touched on. I still run those main tech stocks, and I do rely on them. I do occasionally trade stocks, but I do rely very much on looking at the liquidity. And as Moby calls out, they're often at those big zero numbers. And as we've talked about before, I have a different view to many people, because I look at those levels and it could be an entry, it could be an exit area. And to me, that makes a difference. I know to a lot of traders, it makes no difference. And I'm not going to say I'm happy to argue on that point, but it's like, that's the view. If I reiterate my point there, if you've got a high liquidity on, let's say, on Microsoft, let's have a look what we've got up there. There's some levels built in, $278. Not massive at the moment, still ETH, but what I'm in my head trying to do is think, okay, does that level get added to? And then is it an entry? Is that sellers looking to get in, so they're going to drive the price up? Or is it actually buyers looking at it as their exit? Why David says they're different, or I feel they're different, is if it's an exit, it's just an exit, and those shares been sold at that level are being sold to, you know, thousands of different individual traders.
Yeah.
Whereas if it's an entry, then the seller, which is likely to be institutional for sure because of the volumes, they're going to throw a lot of other things, other assets, instruments, options, and all the other things around it to drive that price down.
Yeah.
If that makes any sense. There's no answer. You know, I don't know whether it's an exit or an entry, but I'm looking then when it gets that level, that behavior. And often you'll see it. It'll smash through a level. You'll see that on ES is hitting NASDAQ, and they go right through it. And you think, okay, well, maybe that wasn't an exit, or maybe it was an entry. But anyway,
yeah.
Wonder ponder.
One point, one question which raised in the last years when I've started to work with Bookmap very intensely was how do we know? Excuse me. How do we know if an liquidity is in support or resistance? As you mentioned,
that's it. That's it. Yeah.
It's extreme. We don't have. I must admit, we don't have an answer for that because when we decided to look a little bit deeper in the order book imbalance, then the point came up very, very quickly. We did it with several. We tried several algos because our first assumption was the price is heading towards a liquidity, which is not. I was told so. So when I started the Bookmap, the price is trading towards liquidity. So that the liquidity is always a magnet. That's yes, one how to say one belief or one
one theory, one
theory. Yeah, that's one theory. So but meanwhile I would say we have to change our mind a little bit, to say it very friendly, because think a little bit different in this way. Let's assume the yes, liquidity is there and the price comes down, and suddenly you will notice that someone is adding liquidity at a certain level. So that means between this liquidity and the certain time when the price sells off or when the price trades down, there's nothing to see, but suddenly you will notice liquidity is coming up. I think the better theory is no one knows where the price is going, or no one wants where the price will be. Be the next minute, the next 5 minutes, or the next 30 minutes, whatever. That's not predictable because the issue we have is we don't know when aggressors will enter the market here. So we don't know when they are starting to buy, when they will start to sell. So this little bit noise that might be thousands and thousands of retail traders around the globe and then pushing the price a little bit up and a little bit down, but those who are really in charge or who are really powerful to trade, we don't know. So with the market can be calm for 10 minutes and suddenly someone hits the bed and the market goes down. That's the first postulate I would like to mention. The second one is this liquidity here is not because the price seeks liquidity. This liquidity is here because he thinks, he assumes, he expects, let me say he or this institution or whoever it is, he expects that the price is coming down to 4,100. And if the price is not coming down towards him or trading directly on him here at 4,100, then he simply cancels and looks for another way. So the theory is simply, and the fact is, I believe firmly that when we see liquidity, it is in a kind of expectation. So, and that's it's a kind of expectation of big institutional traders, market makers. They're a little bit different, but of all informed traders, that the market will most probably go or trade into this, into that level.
Yeah. If I jump in quickly here to the current screens, if you flick onto NQR,
it's been quite active.
I just took a lovely. I just got in long there. It's tight now, so it's safe. But you had a beautiful stop burn below. There was a stop burn as well on ES of 200. But it must be Moby probably got better eyesight than me. 120, I think, on NASDAQ, and that's just a lovely. That's just flat what's left on that. Yeah, simple signals, market moving.
Rights to settlement as well. And NASDAQ was just through and ES was just shy.
You're right. Yeah.
And ES may get to settlement now. It's trying to get down.
It is, isn't it? Yeah.
Yeah.
So David, you are long here at 41.
I'm gone. I'm in and out. No, I took NASDAQ on that one.
Oh, okay.
I think I was in for less than you, but I probably paid less than you. I reckon I was in for 15 seconds.
Yeah, I probably got in about 52, and I got out at 70. So it's any.
That's pretty good. That's about. 18. I got about 10 points. Yeah.
Yeah, it all helps, and I know, again, I often repeat, you have to realize when you get old, you repeat a lot of things, but it's catching those couple of bucks, those couple of handles just keeps the account going. So then this afternoon, where I see something that's a little bit risky, I don't mind throwing not my money, because it's the money I've made in the morning. And that, if you can get to that stage of any trader where you're able to just squeeze out a couple of dollars here and there,
yeah,
and then you're using that in the day to play with it,
it's kind of bait. It's kind of, I say it's kind of bait. You like, I like fishing. So if I have some bait in my boat, I can even afford to lose a little bit. But at the day when I'm taking care of, I'm coming home with a little small fish.
Yes.
Just not to starve. By the way, guys, I think from my point of view, it would be better to look for reversals here, because the order book imbalance is on the downside here. We had this discussion on our Discord channel. Ladies and gentlemen, join us on Discord if you want. Let me find. I'm not a director here. I need a director here in my room.
You do. What I found unusual today, but I might be wrong on the news, so happy to be told off, David. You need to read it properly. Oil blipped up on this idea that OPEC were going to increase, and I'd have thought oil would have fallen on oil output going up. But hey, I don't trade out oil anymore. But what David's point is, I'll be looking at that oil this afternoon, because if oil starts to then fall back, that's a negative thing for the markets.
Absolutely, yes. I've posted this news from Financial Juice. No, not Financial Juice. Excuse me. From where is it? Where is my chart here? I have so many of them here.
We got some nice ice coming in now on ES, so I've got a small short, just got in just at 10, call it 102.
Well, yeah. There's some
chasing it down, at least to 91.
They're chasing it down, yes. You see that as well. If you see the line below the, I am going to repeat myself, sorry guys.
Nothing wrong, we're all doing that.
Just to keep your attention on the right side of the market. It's still down. So most probably you when we talked 5 minutes before, 4100 is gone. He canceled, and maybe it's the same, I don't know. It's the same guy he added at 49T because he's expecting. And the interesting point though is the news that the European Union has faced Russian oil ban, and that means either Russia will remain in the OPEC association. I don't know. If not, then that might be really something where we have a look at. So far, I know OPEC is meeting today, or will have a meeting, or are already meeting.
I think during, So we're down to 90. There's you've got your institutional level, so you've got that level as Moby was calling out, just over 93. There's one of my beloved unicorns, an L3 unicorn at 93. Although Bookmap have cut me off on that, I don't know why. They've must have upset them again.
Wow.
That's why TTW are the best, because they don't cut you off because you annoy them.
It's probably just their licensing thing. You probably just need to speak to Sandra to help you. Sandra's very good.
Yeah, she is.
But yeah, no, I took a small short in NASDAQ there. Suffered a little bit of pain until it got there. But as Walter said, it was heading somewhere. So it was one where taking a bit of pain is okay.
Yeah, there's some as
long as you got your catastrophic stop in place. That's
as you see,
I have play without something.
Yeah, I have lowered my sweeps because of the pre-session. The point is we have to find a way to dynamically adjust this
Really
settings here, because it is a little bit, yes, it requires a little bit manual interaction with the TradeFinder. On the other side, I'm saying it doesn't matter, because you will learn a lot of your market, a lot of sweeps, a lot
I
of
mean, I was
icebergs.
thinking as one interim solution, Walter. You know how you have numbers that you enter into TradeFinder for each of the settings.
Yeah.
You could have two columns there, you know, for an ETH and an RTH, or just
Yes.
column A and column B, and then you have a master setting somewhere else saying you're going for column A or column B all the way up and down. And that might be a way of not having a cloud thing, but I know, just a thought.
Yeah, we prefer the cloud solution, because it gives us a lot of opportunities. So the customer can save the pre-session and the ETH session, RTH session, and maybe other individual settings, so he can switch between them, and we can. Yes, we can announce there's a new release or something like that. It's a little bit more, let me say, comfortable for us, and maybe for the customer. Yeah, hopefully.
No, it would be great. I mean, yeah, TickStrike have got that feature.
Yes.
And Amar did it because I absolutely badgered him.
Yeah.
And eventually he went and got a developer to do it. But it is wonderful. The way you can just switch all the symbols by pressing one little button.
Yeah, absolutely. That's the way. That's the way. As the Mr. Mandalorian, I don't know whether you watch it, but
you're back to Star Wars again. Now.
Back to Star Wars again.
Natalie Portman.
That's the way. That's the way we.
Can I say that? Way. Is that allowed?
What?
Sure. No.
Sorry, what's allowed?
Just one of the characters.
No, he's talking about Natalie Portman, whether he's allowed to talk about her or not.
It's too early in the day to say that. Moving swiftly on, David. So like now it's whatever 10, 15 minutes to the open. So I'm looking at Microsoft. There's definitely lower levels building. They're not massive, but they're building like 260, 250. There's definitely some bloods, as I call those levels, building. On Apple at 147, there's 22,000 already. On Fakebook, going down to 180, 176, there's some levels building. I don't know what they're for. Again, don't know what they're for, but I agree totally, as you both say, it's not always about a magnet, but that's an area of interest.
Excellent, David. Yes.
Area of interest. So are we going to, thanks. Are we going to tore down, as the phrase I use? Are we going to kiss and roll down there? Who knows? But someone's put a fair bit of money on the table for some reason. Exit? Do they want to get out on a short, or do they want to get in for long? I don't know, but I'm keeping it in my mind along with where oil is at the moment and so forth.
I like the acronym or the term ZOE, zones of interest. You know, it's like a girl's name.
ZOE, yeah.
What character was she in that film? No.
Yeah, it is a zone of interest. It's a zone of expectation. It's a zone of expectation where the market might trade. And by the way, when we see that, then we know that we can lean on this informed traders, because they must know more than we. But that's why we as humans can always be on the wrong side, and we are prone to.
Now if I jump. You're quite right, Walter. If I jump to my time charts on Ninja, I know you run this as well, Walter.
Yes,
one of the indicators on the far right run is that depth of market.
Yes.
And with that level too. So it doesn't give any alerts, but at least I'm looking down now, and on my M1 I can see down to 71. So I can see the longer lines on the ask, at least giving me a flavor. And again, where I see something on there, I go, oh, that's interesting. Then I'm going to my Bookmap chart. I'm zooming out, looking at where we've got your TTW institutional and all those other great notes and so forth, plus my unicorns to get a feel.
Yeah,
et cetera, et cetera.
That's the point. Let's just the time is going by very, very fast. So let's stay together with the next 5 minutes. So I have to prepare for the live session then. Let's go to the NQ again, and you see this blue line this line started to drop below zero here at that time, where the market started to trade down. Even this, I'm not a friend of NQ, so maybe you can convince me and trade with you NQ as well. But it's
we just had a Walterism in NQ. We had interaction with a ZOE. So
Okay.
if you look at the liquidity at 500, 499.
Yeah, and then David, and you see that that's one tool here. You can add it to the unicorns and see, okay, the market is still down. And then what the logical consequence should be, if the market is down, I should look for reversals and then pick maybe them at the highs, or maybe we see sweeps or whatever here around, I don't know, and then take this one and trade into the net liquidity at 12,500.
And very much this time of day, again, we've all got multiple things in our minds, and none of them are wrong, none of them are right. But again, a phrase that I use a fair bit is that sucker's punch. Here we are, more than likely, again, happy someone statistically go, that's completely wrong, David, but more than likely the market will go in a direction now up to the open 180 degrees to where we're going to end up going. So if we're starting to go up, as we have done earlier on in the week, we start to go up, I'm not in my mind thinking, oh, right, it's rubbed my hands, it's an up day, let's get on the bid. I'm minded, while keeping myself open, that we're going up so the sellers can get better prices, and we're quite likely to go down. That sucker's punch.
Yes.
Is what I try and...
It is.
Without being too biased.
I think one of the nastiest ways they do it is where they start grinding up throughout the European session, and it just looks like it has to go to the moon.
Yes, yes.
Maybe it was just a bit like yesterday, because it did look, and then they had a poor high, they took it out, and then down.
100 points lower. Just
it was absolutely surprised yesterday. Yes, that they started, I don't know, 10 20 points up, and then they stopped and then punched everyone in the face. Every ball. I'm sorry, every ball.
Yeah, I did. And yesterday was slightly different to the day before that. On Tuesday, is that, again, I think my post, I covered it, is that tech was well bid. So I could see all the ICE, the TTW, hidden asks, hitting the charts, etc., etc. You talk about liquidity, and I'm going short, and I got smacked out, I think, twice before I actually caught it.
Yeah.
And yet all the tech was being bid, and it's not often the other way around, that the indices are lagging the tech, but everything else was bid. Apple was being bid, Tesla was being bid hard, and they then took a real whack. They took a real whack.
David, one question. Do you look at the Tesla, Microsoft, and Facebook on Bookmap, or do you have them on your Ninja Trader?
I'm just on Bookmap today. So the Apple, the Facebook, a bit of Nvidia, Microsoft, as you said, Amazon over there, and Tesla. I have ran them on Ninja, and that's through a kinetic feed that you run into Ninja. Although it's just too many charts.
Yeah, I'm thinking you've got like 15 pairs of eyes, David.
That's it.
I mean, that's why I built that little free indicator that the two of them that I built in TradingView, so I could watch all those sectors and symbols without having to click.
I mean, as I would have said a year or so ago, when I did that thing with Bruce, that Webby, then I wasn't doing that much in terms of looking at the tech. I was looking at NASDAQ. So those people that think, oh, damn, I don't have the dxFeed, I don't have kinetic feed, no worries. NQ will give you, Moby's the expert on this, I'm going to say 90% plus view of what's happening on the tech space. So if you haven't got those, don't worry about it. But keep an eye on NQ, because often she is she's the earlier mover. Not always, but certainly the earlier mover, I find.
Yes, absolutely.
Just interrupt you. Can you scroll back, Walter? I'm just saying on your algo. Wow, I'm seeing this iceberg.
Right.
Yes, there's 1,000 sitting there now.
1,000, yeah. I can't see it on yours, but it just said 1,052 on mine.
It is, 1,055. 20 have been filled. It's been there for 11 minutes. That's.
Oh yeah. In the right-hand column, it says 1153, doesn't it?
Yeah, that's just where I took my short. I've got 2 left, and it's sort of it's on the money. So it's. It blips up 200.
But the trade was the Zoe in NASDAQ, the long at the Zoe of the 12,500, because that's gone up 30 points now.
It has,
I did not take that one.
Just on a blip, isn't it?
That's amazing. Let's well funded. Yeah, look here. This is really a good, huge.
And it is a big one. And again, saying it for saying it. Here we are. We've got 11 minutes to the open. and someone has put 1,300 contracts on the table.
Yeah.
So is it an exit? Are they trying to get out?
That's the point, David. That's the point. That's the point, David. I think we have a lot. We must do a lot of episodes about this, about this behavior, because in iceberg we really want know. It's impossible to know. It
is impossible, but that's kahunas. 1,300 contracts on the table, 11 minutes before the open. Yeah.
That's a message. Let us say that's a message. We can agree on that.
Yes.
I think I'd put money on it going past 4,100 at some point in the next 10 minutes.
And it's a round number, as you would call out, Moby.
Yeah.
It is a round.
It's if they defend 4,100 for the next hour, I won't believe it. But let's see.
And oil is starting to come off, whatever that means.
So I don't have the. Yeah, I have too many charts. Where's the oil right now?
That's at 112.5.
That's come off a bit today. That's
just
good.
Come off a little bit.
Yeah, I think Australia is about to have the electricity crisis that you're having in Blighty. With 100% increases in power bills.
Crazy.
Like oil.
Yeah. I'm fortunate. Well, not fortunate. Over the years, I'm a fair prepper, so I've got a fair bit of solar here. So yeah.
We do, but batteries are ridiculously priced. But
aren't they just? Although I do use the gel ones, I'll say the lead acid. That's not quite true, but I don't use those lipo batteries that are sort of like $1,000 for just this little lipo ones, lipo 4s, whatever they're called. So.
Okay, just a question. Do you see my YouTube screen? Can you see the blue line, the imbalance line on my screen?
Yep,
I can see on the
Okay. Just one. Yes, one person is saying there is no blue line on this, but I think everything is fine here. So so David and Moby, great to have you here again, and it's
a pleasure.
We will talk. We have talked about the imbalances. We have talked about the expectations. It's a Zoe line. That's a quite interesting.
Zoe and Natalie line.
Yeah. Zoe, and that's maybe Moby. I should need your permission to use the abbreviation. for the next developments, because it's simply great.
I think I know more Zoe actresses than I've met Zoes in real life.
Yeah.
It's fairly safe.
Yeah. So the next one, I think we will have a lot of things to talk about. By the way, David, what came in my mind? I would set up the Microsoft, Apple, Tesla, and what else? Amazon as well, to see
what fangs, just to keep an eye on them.
Fangs, yes, to see what they are at with the imbalance lines, just to have or to be on the right side of the market when they drop or when they rush, whatever. We will see that. Great, thank you, David, and thank you, Moby.
I will prepare. Thank you.
Yeah, I will prepare for the live trading in a few minutes.
Man, good luck. Yeah, good
Brilliant,
luck,
everyone. Brilliant.
Thank you very much, Dave and Bobby.
Great.
And
good evening, good afternoon, and a good morning, everyone. Speak all soon.
Yeah, good luck, everyone.
Thanks, everyone. Take care. Cheers. Bye-bye.
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 Hi traders, hello, good afternoon. So good afternoon, good morning, good evening, wherever you are. Welcome to our live trading here and on YouTube. I'm happy to be with you today. We have a great session with David and Moby today. Please have a look back if you're interested in the session. There's so good to hear other traders how they are using and utilizing Bookmap, how they are utilizing TradeFinder. for the trading, and that's of yes, totally of interest here. So just have a look back when you have time to go through the recordings here on YouTube. Okay, market will open in 10 seconds, and then we will see what we can do. I will comment what I see here on my screen, and one question came up here. I agree that being able to dynamically adjust the settings is a must. Having to manually adjust them is a deal breaker when trading stocks. Yes, stay tuned. I know that we can do that with cloud nodes as well. It will be much easier than today. But in any way, so we are working on that. We know that we are working that. On the other side, I challenge everyone with a with a challenge to understand what trading is really about. Because in TradeFinder you can't make any damage. You can simply learn a lot about your instrument. But yes, notice that and copy that, and that will be released in one of the next releases. Okay, so going back to ES, and let's stay together for the next 1.5 hours in live trading, just to comment and to see what's happening. We have, by the way, if you have been attended the first broadcast here with us, with David and Moby, then you have seen this wonderful short opportunity at yeah, my screen is a little bit lagging here. You have seen this wonderful opportunity here at 4100, which gave you 10 points back. No, not 10, but maybe 8 points, 8 points. It was an incredibly good opportunity to short the market, and this is because of the dynamic iceberg development. So we define that as a dynamic iceberg development. And someone sold here 1,500 and more contracts. So for you who are watching and listening and understand what the market is doing and how the market is behaving, you will see the dynamic iceberg development and the iceberg mechanic, the iceberg algorithm with the TradeFinder is the best in the market you will ever see, and it's extremely helpful to watch that, to see the day IDs. Take the short here with a very small risk, tiny risk, 4100, maybe 2.5 points, not more, and then selling off for 8 points here. So I'm not in at the moment. If you have questions, please put them here in the room, or in the chat, excuse me. Please put them, the questions in the chat, and let me know what you think. Or yes, not what you think, yes, what you think, of course, but as well your questions here to be answered. Now, one of the most important parts is, you know, every one of us here in the room and others as well, we are watching and are interested in one question: where's the market heading today? And that's the most important question. So I've seen and I have discussed with a lot of traders here, because the most indicators are simply, let me say, good for 50-50, but when you look at the order book imbalance and the TradeFinder imbalance tracker here, it is 100% reliable. It's absolutely reliable for liquid markets. For liquid markets, I'm talking about liquid markets. There are exceptions, of course. There are exceptions and will be exceptions. Of course, for markets who are delivering not the appropriate liquidity to be measured, but that's not a problem of an indicator or of any indicator. This is an issue of the market and how the market is trading and what the market is doing here. So that's an important point as well. But you see that from the beginning on, we have had a short opportunity here. We have had a short opportunity. I have to start my broker here. I have to start my broker, and as well my bracket trader, because I missed that. due to the conversation I've had with my colleagues here. So now I'm ready. Thank you for removing the big yes, of course. Now you should see my screen as well on YouTube. Very nice sell-off, and you see the imbalance line starts to trade towards the zero line. That means the imbalance is on the upside, yes, higher than on the downside. And as well as you can see, the liquidity here at 40.80 was cancelled, or is cancelled, was cancelled right now. That means the market is heading up. This iceberg was traded through, and now something happens. I don't know what, I don't know why. I have not my Squawk, my how to say, my news on here because of the YouTube, and I don't want to disturb anyone here in the live trading here. So just simply relax, watch. There's no need to rush or to chase anything. Everything will come to you. So be calm, sit back and see what happens here. If the market is too fast, we see 2,400 trading here, and the average liquidity is around 50. That's really heavy, and that means the higher the volume, the lower the liquidity, the higher the speed. You will see that, and you will notice that on your price ladder or your price entry system or whatever. So very nice to see the first volume spike we have had here is at this point, and as you know, we added volume spikes. You see what happens here. You have had a nice volume spike, we say exhaustion to them. So if the market is exhausted, there is no way to trade lower, to trade higher. There are several exceptions in the market. When the market is in a strong trend with a high volume, then we will see several spikes coming up. That's a kind of the market strength, of course. That's yes, you see here selling off, and exhausting it on the way down here. The last exhaustion was here at 40.80. That is a volume spike, and volume spike means a kind of exhaustion. The market is not trading down. The matching algorithm must find new buyers or new sellers in this case who will drive the market down. That didn't happen. You see a very nice divergence as well here, and the market traded up into the next volume spike. Our volume stop here, volume stop at 94.50, which was a really excellent opportunity to sell it again, or go against. Every of these opportunities gives you an extreme risk-reward ratio. The only exception with the risk-reward ratio is that in a high volatility market with high market volume, aggressors trading here in between bid and ask liquidity, you will have to define or set your stop, maybe not 2 points, but 4 or 5 points away from your entry point. That's simply the case when you trade high volatile markets. So let's see maybe if I see something which is totally interesting. You could have, of course, done few points at the beginning. It was a sell, as we talked with David and Moby in the pre-session or the pre-market talk. There was a very nice high iceberg traded at, just for those of you who are joined us again, at 4100. Watch the 4100 here. That was a really strong resistance here at that time when the market started. The market is rushing up and down, and now we see a little bit more liquidity on the bid. Watch 40.95. Let's see what happens there. You see this dynamic iceberg developing all the time. It's in the book since 4 minutes and 50 seconds right now. traded already 118 lots at 40.95. So it's still waiting here, still patiently in the book waiting. It's most likely that this guy will be filled within the next time. So again, there's no rush to do anything and to rush into something. So simply wait until you get very nice signals until you understand where the market is most probably heading to. We are now in between 40.71, 40.70, 72 and 95. That's the range where the market is trading around. And if you joined us, we have had a very nice short at 4100. And then again along here at 40.80. Let me have a look here just again. 82.25, 82 and a quarter, and 94 and a half here. Based on volume stops, on TTW-TradeFinder volume stops, which is, I think, the best real-time tool. There's no need to guess if that happens. The order book imbalance is still on the bid. It's a little bit more still on the bid. What I would like to see is if the market is going to trade into 95 to catch or to trade into this liquidity at 95. There's still an iceberg open. We call that dynamic iceberg development, DID develop. Then dynamic iceberg development started here at that time. That is 9:34 Eastern time and is still in the book, still awaiting an execution here. That's how we read a market, and based simply, you don't see any additional signs on this market on my chart. When you're looking at my chart, you don't see anything which would spoil my view on the market. I don't like it. I just want to see what the market is doing, where the market is heading, and is there an opportunity for me to join the market. Imbalance on the bid means expectation is down. There's a question from Juliano. Yes, it is. Order book imbalances are an important part of many algos and automatic strategies. You're welcome, Juliano. By the way, nothing works on its own, you know that. So the market is trading now into 40.95, 40.95. Let me see what happens here. Liquidity is gone, you see that? And the bad point is, I placed my order at 95. That wasn't hit here, wasn't really hit. That's bad. So I will cancel my order at 95. It can happen most of the time if you're not fast enough that the market is simply not trading anymore and rushing down, although this iceberg is still open. This iceberg is still open here. It's not closed. You see that the ID is still open. 500 swept, 500 contracts here, 500 contracts swept at that point. So 500 contracts swept here, 500 contracts swept here. That was the entry point for a short here, 95. So be relaxed. Try not to overtrade. That's the rule number one. Just wait for the market to tell you what to do. The less you have on your chart, the better you are off, because too much information simply can cloud our decision making part of our brain. So I'm just watching and trying to comment. I'm watching this again, 500 swept, 500 here, 500 there, and here again. Someone is not amused. As well, as I mentioned, we are trading between 95 and 71, 72. That's the trading range at the moment. You see, based on the price dynamic plot, we have more sellers, we a little bit more buyers coming up, but when they are hit, or when they hit 92, and that's as a message as well, when you focus concentrated, then that might be as well a selling opportunity. You know, it would be pity, of course, if the market does. At least I tried to get into 95, and it didn't get me any chance here. But it was extremely well today that this chance was there to sell 95 on the point, to the point. I'm a little bit cheap, so I don't want it to have 94.75. to get in, but really to be on the point. That's what I like. That's my style of trading. I like to be the first in the trade and then to manage the trade. I know a lot of you have different styles. That's very fine. That's okay. But my style is if a trend becomes obvious, you're too late. That's my motto, and I'm trying to keep that with me or for me. And try and trade according my rules here. So just waiting for TradeFinder to analyze the market and to show what the market is doing. At the moment we have more, the imbalance is still on the downside. I'm looking for sells. By the way, nothing works for trades on its own. I'm watching the volatility indices, I'm watching SPY. I have everything others here on my charts, other charts here on my screens, sorry. And to have a look here, we are ADD, the overall market index is dropping from 400 to 138 plus. Tick is down, it's trading below zero. Nice, tick is down, trading below zero, recovering a little bit. So the ticks overall are more reddish than greenish at the moment. The gap was, I even don't know if the gap was closed. No, yesterday's close was 98. That was the yesterday's gap here. Let me have a look here. No, it wasn't closed from the beginning on. Oh, I'm sorry. They started at a gap here. I would say that's technically closed. You see how they are trying to trade into 95, because this guy who was sitting now for 14 minutes, 15 minutes right now, a few seconds, he is trying to get a fill. And it seems that the algo is trading against this 95 here. You see as well the native iceberg dome here, or volume, the native nice iceberg profile here indicates a good resistance at 95. It doesn't mean that this 95 will sustain and will stay here, but it means that we have had a lot of sellers on bid who prevented the market to go further up here. As well, when you look at the numbers we have in this screen part here of my chart here, we have 385 icebergs on ask and only 185 on bid. That means the resistance is the hidden resistance, hidden orders are higher than on the bid side. For those of you who joined us, we have had a nice opportunity to sell 4100 first. David and I think Moby took it, and I was exactly on 95. I was exactly on 95, and I didn't get a fill here. That's really what's always pity if you're right and you don't get a fill here, but it doesn't matter. Wait, the market will give us a lot of chances, or not a lot, but some good, very good chances to trade and trade with a good risk reward ratio. Again, when I'm watching here the imbalance simply dropping again against the bid, when you see that, then we have certainly an how to say,
tick new low,
an indecisive market. It's simply going up and down, and that's not a fault of the indicator. This indicator is 100% right. So for this liquid instrument here, for ES, the imbalance line is 100% right. There's nothing lagging or nothing wrong or whatever. It's really a good indicator which shows you on which side you should lean on in the market. If it goes a little bit beyond above zero, drops below zero, goes above zero, and so on, then the market is in simply sideways state. Then if you want to trade, sell 95 with 2 points, 2.5 points, stop. So when I have my candle chart on my side here, I'm using NinjaTrader, as maybe most of you know, and I have only lizard trader indicators on my chart here, nothing else. I'm using to read this that way, so we are still below the VWAP, we have still below the regular open, which was 96.50. We are still below, where is it? Yesterday VWAP here, yesterday VWAP was 41.12. That means you see how the market is indecisive here. Goes up and down, the liquidity is on 72, that means here somewhere, 72, and the liquidity is 95. It's a little bit below the open and below the VWAP here. And when you translate it to the Bookmap, you see it very clearly that we have 96 was the open. Yes, thank you, Chuck, for that. He updated the open. I'm just adding a dummy in my to my numbers here. That's the open here, 96. We are below the VWAP. It's 1-to-1 to my candle chart here at 99 or 98.50. 98.50, that's the VWAP. And then market is simply now in a state where it could get really boring for us today. Again, imbalance TTW-TradeFinder's imbalance indicator is the most reliable. It's not the most, it's one of the reliable indicators in the whole industry. So does not mislead you at any time. It's down. That means if the market is trading on to the bid, that means they are selling and there is no support on the bid side, then we should, either you are in, then keep it, keep it, keep it, keep it until this line maybe reverses or changes the zero line. Keep it and stay on the right side. If you're not, then look for pullbacks. Richard is asking, what are your settings for the order block? I'm not sure what you mean by block. I think you mean order book. Can you be more precise? Which indicator are you using in Ninja? We are working on a lot of improvements on TradeFinder, so stay tuned. TradeFinder is a very complex product and it analyzes every data. I'm not talking about future here. I'm not talking about ES alone. I'm talking about every single instrument. That means stocks and futures and cryptos as well. And we will improve, of course, because first of all, for all of you, we are using this indicator for us, so we are using it for our own trading, and we know where we have to, thanks to you guys, by the way, where we have to improve, or what we must improve in the next software releases, of course. Yes, there's a to-do list we are working on, and be sure, stay tuned. We will push these releases through very soon. Richard is asking the small box at the top right corner of your chart. 2 numbers there. Yes, 2 numbers. So, you know, we will talk that, and I will do an educational session the next week. So please join me. Please subscribe. I would like to encourage you to subscribe to our info letter, please, ladies and gentlemen here in the room, because I will do educational lessons along the next weeks of all add-ons here. Some add-ons are more complex than others. Imbalance tracker, I did it last Tuesday. Please see the last YouTube video. Then liquidity tracker, and most important one, then we will talk about icebergs as well, because we have a slightly different view on icebergs, and I show you our iceberg detection system here, and algorithm is the best in the industry. And then we will talk as well as about the market and Market Explorer, what's behind. That means volume stops, sweeps, volume spikes, absorptions, and so on. Richard is asking these numbers here, 343 and 8348882. What I'm measuring here, ladies and gentlemen, is native icebergs. What I see here, based on the market by order data, based on the market by order data, I'm watching icebergs here. I'm watching native icebergs. So the evaluation method is native, not synthetic or not combined, and that's what I want to see. So we are measuring real icebergs along the day in ES, NQ, ZB, oil, gold, whatever you trade with an MBO data. And one of the measurements is the data, is this dome here, and the dome, let me just find here, the hidden order iceberg dome, or we call icebergs hidden orders because they are hidden. And that's what you see here on this part, or in this part of the chart here. These are all native icebergs traded on this chart. This is a dynamic presentation. And as you can well see, is we have had a lot of iceberg traded at 4085, which can be considered as a natural resistance. And we have a lot of icebergs traded at around 4090, 492, 91 in this area here. And to make it a little bit easier for you to understand what it is, we have added these numbers. That means based on the zoom factor I'm using here for the screen, we see 1086 icebergs traded on ask and 390 or 380 now traded on bid. These are native icebergs or native hidden orders which has been traded from this time where the chart comes in here to this part where the where the traded part starts here. These are native icebergs, and you see there have been a lot of hidden orders or native icebergs traded on ask here on this part of the order book. And that means if this is the case, you can assume, and it's legit to say, that we have a good support on ask so far. This is our hidden order traded on ask and bid. And we are using dynamic hidden order plot here. These are all icebergs traded. You know, and especially I'm a totally opponent of having numbers along these bubbles here. It doesn't mean anything, so it doesn't give you any significant help to understand what the market is trading or trading and what to do for you. It is more confusing. Every additional information you can avoid, please avoid it, because it will stop you, it will hinder you to trade or to make the right decisions. That's simply a psychological issue, and it has nothing to do with trading. And you stand hidden order blocks. Yes, these are hidden orders. These are hidden orders on ask and on bid. To make it a little bit easier to understand, if you don't have the right understanding, or maybe it's hard for you to understand what's behind this plot, then we have added the numbers here, just to give a clue, an idea in what condition the market is. Jana Hawata, I would be a great addition to show the triggered stop losses as the SI indicator from. I don't know what they triggered stop losses. I don't know what you mean, Jana, as the SI indicator from BM, from Bookmap. I know we know the SI indicator from Bookmap, and what you can do, Jana, is simply write to support@ttwtrader.com and put an example, and we will see if it makes sense to put this information as well on the hidden order part of us. I'm not sure, because we want to go a different way than SI indicator does. That's for sure. That's for sure. Richard, I'm a subscriber. My chart is showing numbers that are a lot lower. What do you mean? Excuse me, I forgot this TTW banner and removed it on the screen. It has to do with the zoom on the charts, yes. You can zoom in and zoom out. You have different numbers here. You will have different numbers. So when you see, yes. So Jana, please make a screenshot. Make a screenshot and write to support at TTW to give the developments an idea what you mean. But I'm sure we know that, because you know, programming icebergs is nothing secret. The stop, yes, but we have it as well here. Stop loss indicator shows the number of stops that have been triggered and are a good way to see exhaustion. Yes. Okay, excuse me. Excuse me. Give me here chance to find what I wanted to see here to show you. Here. This is the first version of our volume stop here, Jana. And it indicates a very hard volume stop. So we see this volume stops, what you are mentioning, and how Bookmap is treating them a little bit differently. We will add in the next versions more to the volume stops here. And the volume stop shows a very clear exhaustion. We have divergences, we have different filters as well, where we can use to find the exact swing points. So we see that a little bit different, and but I'm not sure whether the developers will follow their way, because we want to go a different way than Bookmap. Yes, we want to make it as simple as possible for the user, for the trader, to get a clue where to trade and why to trade. And that's one of our ideas how to do that. And by the way, I know what you mean, the number of stops. I don't want to start the discussion, how do you know what orders of this are stops or not? I don't want to start this discussion because that's really something we can do it in private with a glass beer or wine or whatever. I will show you that this is nearly impossible to find. So it's an assumption to think there's a stop loss or there's a stop triggering on the way up and down. But that's only my opinion, and we as a group have a different view on this stuff. So don't believe everything you see on chart, because everything can be, yes, can have a different meaning. So Jana, if you want, again, I want to motivate you, write to support and see, and let the developers and decide if they want to add something like that or not. It's not in my hand. We have had a lot of discussion, Jana and others here in the room, about of icebergs and how to see them or not to see them, how to code, not how to code them. And I'm sure we have the best iceberg detection system in the trading part here. That's for sure. We have did a lot of proofs about it. By the way, a lot of back testing and forward testing based on icebergs as well. We do always back test and forward test as well with the volume stops, and we have this is the discussion as well about the volume stops. Let me say, there's a room for discussions here. There's a room for discussion, of course, and maybe even controversial discussion. In any way, you know, my attitude is I hate religion, I hate ideologies, I hate something which might end in an not in a war, but a really controversial, objective manner. I don't want to that. If you have your own style, then use your style. I'm showing, or we are showing everyone who wants to see a little bit more, let me say, more clear, a style which is a little bit more clear. The disadvantage might be you have to wait simply until you see something. You see at the beginning, we have had a lot of good signals. I missed them at in the pre-session, the pre-talk, 4100, absolutely obvious. Then the short at 95. I tried the short at 95 again. Didn't get a fill, and I'm saying and watching this market moving away as well. I missed this very nice long position. You see the imbalance line is flipping. Imbalance line is flipping here. Yes, that means here. So the imbalance is on the bid, excuse me, on the ask here. It's on the ask. It's on the ask here. Quite calm liquidity here as well. I'm not shorting that because I have support on the bid. Sweep up, sweep up. Another sweep. Let's have a look at the volume stop here. I did a short, experimental short. I'm just at break even. I think it's very hard to keep this at 41.06. I'm playing with my position here. I'm one off, one in. So if it comes against 0575, I am simply not in a losing position. I have simply something for dinner. Watching that closely. So that was the breakout here. It was a breakout. Okay, I took this very nice little short here. The reason for the short was, as maybe Jana mentioned, with a stop loss, but it's a little different discussion. I don't want to do that here. Was the exhaustion here. I saw the first exhaustion coming in at 2.25. The second one was extremely fast with a sweep up at 07. And I took the opportunity to short 06 here. In this case, what makes me a little bit more uncomfortable was this liquidity at 4100. You remember we have had 4100 at the beginning as a good resistance point. Let me show that this resistance point to you. Yeah, it was here. I think it was here. Yeah, that was the point. So don't mind the mess here on the chart. But that was the first one, 4100, and very nice clean shot with an extremely good risk entry. Maybe the stop only 2 points, 2 points, not more, maybe even less than 2 points. Yeah, short into liquidity here. Then market dropped very hard off here. Depends on your trading style. If you keep it again against 100, 4100, then you will get maybe 20 points out of this trade and you are done for the day. The second one I missed because it's simply too fast. I'm commenting, I'm explaining, I'm watching here my screens. Was 94.50 and 89 here. To fund short right now exactly into the 40.80. That's a very clear. Yes, it's hindsight. I know afterwards, but sometimes we have to explain what happens to understand and to transfer to future actions here. So sell it into 40.80, and you see how they are trading around 95. Yes, yeah, okay. My idea was to sell a 95. Didn't get a fill. And then okay, let's go back. Then I took this opportunity to, that was this part. Let's see if, yeah, then get an opportunity to sell 06 here. You see that's our volume stop philosophy. That's our volume stop mechanic. We want to improve. We want to find the swing highs and swing lows. We don't never know if this is a stop triggering
new
here.
low.
That's, Gianna, what I look here, what happens. Yeah, we will never know that. I'm not sure how you will prove that these are stops who are triggered. But anyway, I don't want to open this discussion. That's not our business here. So my short was 06, and look here, now it's trading into 16 points. Ladies and gentlemen, 16 points. So with TradeFinder, if you are focused, if you are watching and waiting until you get the chances to act, you will get at least 2, 3, 4 trades a day, which will bring you, or make you green, or bring you, feed your account into the positive area. So let's see, 06. I was short 06, ladies and gentlemen. Okay. Thank you, Captain. Yeah, that happens. But you know, today we have had 3 or 4 opportunities. And by the way, I'm done. Then I'm not doing more than, let me say, in average 4 or 5 trades a day. I don't need them. If I see an opportunity and I understand, and I first understand, that's absolutely important to me. At least I must understand what I'm doing, what I'm seeing here. Then I'm off, simply switching off, or let the charts run. Let the charts run, and coming back, enjoying, going to sport. We have a summertime here. Enjoy the sun. Go out, do anything different and meaningful than staying and staring at the screens here. Yes, I only trade on edges. That's the point. You know, I see a lot of traders who are constantly in and out, in and out, in and out. So I mean, I don't care, but I'm allow myself to command that this is something not only good for your account, but only even maybe can hurt your psychology, and yes, do a harm to your psyche as well. Okay, ladies and gentlemen, thank you, Lord Vortex. If someone is speaking now, then simply keep off, grab a coffee, whatever, enjoy, make a break, do some gym, yoga, whatever. There's no need to force anything. We will run into, it's now 1 hour, it's 10:30 Eastern time. We will run now into lunchtime, and the market is awaiting the non-farm payrolls tomorrow. That's an absolutely important event tomorrow. So keep calm, relax. You see how nicely this TradeFinder, how perfect TradeFinder works. And by the way, for those of you who are using TradeFinder, we will improve it. Be sure, stay with it. It's every cent, every penny worth you are investing in this technique to understand what the market will do. And once you understand, you will see the impact. That was an iceberg, 1,419. Let me just show you the iceberg. the iceberg information. You see the iceberg information here. 1,419 have been traded here at I see there's another sweep here between at excuse me 4,100 again here. 1,419. That was a very nice short of 4,100. You see how long it was in the book, 290 seconds. You see how many of the contracts have been traded actively and passively. 570 actively and 902 passively. And one contract wasn't traded. That means I think this guy wanted to have 1,420 contracts traded, but one contract wasn't hit, so one was left and he cancelled. That's the point where this algo cancelled his intention to trade. He wasn't interested anymore in 4,100 and he cancelled the trade here. So with TradeFinder you will learn a lot about every market you're trading. It's a little bit more difficult with markets which are trading with low liquidity and low volume, that's for sure, but for most other markets as well, for the big stocks, that's really a nearly perfect tool. And even if you only use the imbalance tracker, it's on the downside. It's on the downside. It's on the bid. Excuse me. It's on the bid, to be precise. Hi Garov. Yes, it is. You can define your own sounds. You can use the customized sound file feature and then select the folder, whatever. You can define, there are a lot of programs out there to define synthetical sounds. You can then attach them to every of these indicators here of this on these add-ons. By the way, when you understand this system, because it's a unique closed system, you will see by the price dynamics plot here, these big red bubbles or whatever, indicating an exhaustion of market exhaustion here. That's a volume stop, market exhausted. Market exhausted, not so much, but you will see that as well in the divergence here between this point and that point, this data point and that data point. You see that visually as a color. Okay, thank you, Lord Vortex. We can relieve a little bit. We can sit back. And enjoy.
NQM2 by volume spike.
You see very nicely you had, if you, yes, we have had several good opportunities, at least one, two, three, four great opportunities to make more than 10 points today. Absolutely. So what do you need else? By the way, we have had an institutional level here as well. I can't watch everything here. I'm sorry, guys. So if I'm in live trading, I try to focus, I try to answer your question, I try to comment, and trying to do everything here around this session to help you to see what I see here. And we have had, it was on yesterday low as well, institutional level at 40.71, I think, or 40.72, not sure. Have to look on the in our Discord room where I'm posting the institutional levels. By the way, I'm not commenting them, but they are for free for everyone who is in the room, who is using Bookmap, who is using Cloud Notes, and they are remarkably precise. Oh, hey, Alan is asking, I know you say not to trade at the open at 9:30. When, in your opinion, should we wait to trade after RTH opens? That's my personal opinion. I'm not trading at the open because it's so extremely fast. So most of the time I'm locked, and with this incredibly low liquidity and high, when the market opens and when the market, by the way, when the market comes to an end, if you have liquidity, if you have TradeFinder installed, I would encourage you have this liquidity tracker as well on. It's called liquidity tracker. Yes, that's what I see, what I have here on my chart. You will see extreme high market volume. That means the market starts with 3,000, 4,000, 5,000, and the average liquidity is extreme low on yes. And that will shake you through. It's so fast, it goes up 5 points, 10 points, and it comes down really fast. So that's what I want. I don't want to trade. Today it was an exception because we have this 4100 along when we have been in the talk here with my friends. We saw this 4100 coming up with this extremely big, huge iceberg. That was for sure a really good opportunity to short. That was at the beginning, that was an exception, but I recommend, let me speak about myself. I'm not trading that because the volume is at the beginning and at the end is extremely high. So it can be that if you are, for example, long and the market approves your long ID and it goes up very quickly because of the high volume, market volume, then you're on the right side. But my experience is not so, let me say, optimistic. Yeah, I mean, wait simply until the dust settles, and you will see that based on the liquidity tracker, because we are measuring market volume, we are measuring liquidity. And if this is in an, let me say, appropriate relation or ratio, then you can do that. You will, I mean, you will notice that. You will notice that on your price ladder. When the average market volume aggressors are very, very high and the liquidity is low, you will see the speed on your price ladder as well. So wait until you find it's the best time for you. You have to find your own time. Maybe it's the beginning, maybe it's after the lunch. For me, it was here 8:16. That means 10:15 Eastern time. Yeah, it takes time. I have a lot of charts running here on Bookmap. Give me a second here. The second one, when I saw this volume stop here, that has been another very good chance to shorten the market. The first one, as I mentioned, was 4100. That was pre-market, but you see what happens then very, very fast. You have to be very quick here with your, either you are using Superdome or whatever you are using, so you might have function keys defined for buying, selling, and exiting, so on. That's all. Everything is possible. So I don't know what technique you use, but anyway, if you're not sure, wait. I waited 45 minutes and got a very nice chance. I missed this one as well because of speaking. So, Alan. I can't give you an answer whether this is 10 minutes, 15 minutes, whether it is maybe in 1 hour. I can't give you an answer on that. That's really something very personal. A lot of traders are just in when the market opens, so they are taking the risk and hoping that the market goes 5 points up or down or whatever. It doesn't matter. I can give you the answer that the market at the beginning and the market at the end for ES and INQ is trading with a high volume market volume. Thousands and thousands contracts in the first minutes and 10,000s and 10,000 contracts in the last minute of the day. So stay off. If you will get enough chances along the day to trade, and decent, good chances where your risk is controllable. And that's what we want. You want to control your risk. First of all, you want to know what the market is telling you. You want to know what you are doing. You have to calm your amygdala, your brain. That's a part of your brain. You have to work with your fears, with your expectations, with all other stuff. When you are in a trade, you have to curb and to control your emotions. That's a lot of how to say, things you have to do when you're in a trade, and therefore you should know when to trade. You don't need to rush. At least I would say to everyone, you don't need to rush in any trade. It's a little bit different if you are trading options. Then you can hedge your options. You can build several strategies with options. That might be a little bit different, and the risk with options is a little bit different. But anyway, it doesn't matter. Thank you. I apologize. I'm sad about this suckers here. I'm really sorry for that. So, but as well, just let me say something important to you. We noticed, and some user gave us a hint that there are spammers on Discord too, and they're using our logo and my excuse me, my handle. They're using our logos and my handle to spam you, to ask you for cryptos. They're promising something. They wanted to lure you into some financial transactions or whatever. I hate spam. I hate spam to the death. I hate spam, and we never ever send emails or ask for anything to our whole community. If you are subscribed to TTW-Trader.com, then you can unsubscribe at any time. We are using MailChimp as the mail system to contact you. I'm sending only information about upcoming events, seminars, educational seminars, or release updates, nothing else. We don't ask you to send us your IDs, email, or whatever. Never ever. Never ever. If you see something like that someone, a scammer is scamming you with our logo, with our handle TTW Trader, please report immediately. We have to find a way to ban them. Although it is a fight against mills, windmills, it's not possible to eliminate this forever. But anyway, it's worth the fight to reduce this, to ban this people here from our room, and maybe even from the YouTube channel here. I'm sorry for that, but that's the daily business, and we have to work with that. So never ever we are going to spam you, to send you something unsolicited messages or whatever. Never ever. We don't ask you for your emails. We don't ask you for passwords. We don't ask you to join us, to invest something or whatever. Never ever. So please report everything you will maybe be aware or notice or whatever to us direct to take appropriate actions. Thank you for this. Walter, could you elaborate on blue-green lines with the number 10, please? Jana is asking. Yes. I did it on Tuesday in the education of the imbalance line. You know, order book imbalance is the part of trading which is, I'm saying that very consciously, is for most of us not known and underrated because we are spoiled with so many other stuff which is really sometimes less helpful than the order book imbalances. So when you see the order book imbalances comes down, then you are here. When you are here, you know, okay, we have to look for sellings because order book imbalance is on bid. That answers the question, where's the market going to? But however, the order book imbalance is on bid, which is right, and suddenly iceberg supportive actions take place here, like volume stops, which are taking out stops and lead to exhaustion. That's our presentation of volume stops here. And then you will start to realize that the volume stops are here simply to stop the market maybe 1, 2, 3 times, and the market will stop. And then what happens, even if you have a liquidity here, the imbalance line will start to race towards the zero line here. Will start to race as long as the price is going up, or with the price. The price is leaving, or is yes, is leaving this liquidity, and that means the imbalance line is as well heading towards zero line. Now look here. The market is most of the time, statistically saying, market is 60–70% of all time in a sideways move. That means it goes from one price 95 to 90, so it moves 5 points up and 5 points down, 5 points up and 5 points down. This is called congestion area. And we are measuring and indicating, when you see this green and blue lines here, or yellow blue lines here, and the number 10, this is a real-time congestion area. You see that's based on the imbalance line. It's a congestion area. That means if the price, this line, imbalance line, moves 10% below zero, 10% above zero, 10% below zero, 10% above zero, and so on, you will get a symbol on the chart. And if it goes simply, if the line oscillates around the zero line, we are in a so-called congestion area. Now, there are several techniques to trade sideways moves. First of all, you can, if you understand that this is a congestion area, then you will see a rectangle, or let me draw this rectangle here. So, rectangle, and maybe you know all the fine educations based on Murphy and Co. The technical market analysis. There are two. I think Murphy is one of them. Then you have here a rectangle, and now you can say, okay, I'm waiting because this is a congestion area. It's not clear to me where the market is going. Based on the common technical analysis of markets, see Murphy and others, you can now say, if the market touches then the upper part, or this part, when the market is approaching the upper channel, I have to sell. If the market is approaching the lower part of the channel, I have to buy. That's one technique. Or you can say, okay, I'm staying out. I'm completely off this market because I want to wait when the market started to trend into one direction. Or the market shows me based on iceberg that there is some support or there is some resistance. Or the market is showing me based on volume stops. This is a volume stop, which means exhaustion. So these lines are based on the order book imbalance. As long the order book imbalance is changing between the zero line up and down, this will be drawn in real time. And you can set, and you must set, the settings, so as colors, for example, the dome level. This is the incremental for each instrument. Every guy, ladies and gentlemen, every instrument has its own incrementals. That means an incremental is one tick. One tick means for yes, it's a quarter. One tick means for oil, it's a cent. One tick for ZB or for the treasuries means it's a fractal of 1/32, 32nd or 32nd, I think it is, and so on and so on. For Euro US, it's 1/10,000. Yeah, I am not sure. So anyway, but you know what I mean. These are the incrementals. So what I'm doing, I'm measuring the dome level based on the best bid offer, which is this is the best bid offer here. 5 ticks up, 2.5 points up into the 40 points up and into 40 points down. So based on the best bid offer, that's the zero line. Best bid offer is the reference line, excuse me, is the reference for the dome level from dome level 2. Therefore, you should understand what the depth of market is and what an order book is. And then you can set, okay, what do I want to see? 10%, 20%, 30%. It depends on the really on the instrument. That's nothing we can do dynamically. It's not possible. First of all, imbalance is static. We only have to understand or need to understand the instrument. The imbalance for NQ, let us have a look at the Q, is different, totally different. Here the dome level for NQ I set to 2 to 500 because we are measuring, we have, that means $5 up and $5 down. The incremental for NQ is, I think 1, not sure right now. So dome level 20 to 500. That's totally different than for ES, and it's totally different for ZB, and it's totally different for other instruments. But the technique is the same. We want to know, every one of us wants to know, where is the market heading to? What is the market doing? Where should we put our money on? It doesn't matter whether you're trading stocks, it doesn't matter whether you're trading futures, and it doesn't matter whether you are trading options. That's totally off of the discussion. Every one of us want to know where's the market heading to. And the imbalance line is the most accurate line to give you the idea where an instrument is trading and which side you should lean on when you are trading. And those, like in Q here, you see the warning signs on the wall here. These are stops, these are icebergs, these are sell sweeps. This market is coming to an exhaustion. Not necessarily at the point here for the NQ, but you see the area where the market starts to trend up again. Goes hand in hand. You can have this chart in parallel. You can have this charts in parallel here, of course, and watching what happens here. You will see sometimes, not every time, but sometimes, or more than often, they are going in parallel. And when you see both signs here on the screen, then you have to find a nice, decent, recent entry point with the lowest risk for yourself. So have a look here at this ES again. You see, the market is simply sideways. It goes sideways. When the sign comes up, you can, oh yes, it's drawn here, you can even take this opportunity to trade. In this case, sell it. In this case, buy it. In this case, sell it. In this case, buy it. It's, you know, all this trend following or sideways indications are tricky to trade. If they are trading 5 points up, 5 points down, that's good. But if a very tight range, you will have had a hard time. That's my answer to that, Jenna. For all those of you who want to know more about the imbalance line, please go to the channel, to our YouTube channel, and see my educational session, which goes, which is 60 minutes from last Tuesday. Go through it, have a look at the imbalance line and the settings. Put it on your chart. Use the TradeFinder. It's the best analyzing tool. I'm totally convinced. Once you understand, you will get the most of, and if you can wait, you will get really good, start to get really good results in trading. However, nothing is a holy grail. Please keep that in mind. And now that's where the market is coming a little bit. It's getting boring, as every Thursday we have had a very nice trades at the beginning and opportunities at the beginning, opportunities at the beginning, and now the market is coming to an break. What we can say based on this market here, it's a little bit of congestion area here. If I can take, no, it's not possible to draw. It's not possible to draw here into this. Do I have draw tools here? I'm not sure. Oh yeah, I have. Anyway, I can't draw in the subchart here. So, but what I wanted to say, if you draw a line from this point to that point and from this point to that point, you'll see that's kind of what is triangle maybe? It's kind of triangle here. So it's simply congestion. It's looking for a direction. The market is looking for a direction here, and you see that based on this horizontal lines here, blue and green, blue and green, blue and green. That's simply something where the market is not in a trend state. It's not trending. And now if you compare that to your charts, to your candle charts or whatever charts you have, it's really hard to see something there. Yeah, I know Dalton, I know volume profile. I've been a student of Dalton as well, and of HFT trading, Steve Hammer, and no bullshit trading as well. I did a lot of education. I would encourage every one of you to educate himself, different styles and approaches, techniques, and so on. It's every time good to know more than necessarily, because it's invaluable to see the difference into what, and then to find a way how to trade and where to, what to utilize for your trading, what to use for your trading. On this chart, yes, we have a regular open, we have an open range high, we have an open range low here. That was the open range based on my settings here. We are still within the open range high, open range low. We are above the open, but we don't see very clearly what are the internals. What are the internals here of the market? What is in the market? What happens in the market? So this kind of trading with candlesticks, we need it for our investments, long-term investment, mid-term investments. That's not possible with Bookmap. That's for clear. But if you want to do day trading, then I would encourage you to stay with Bookmap and TradeFinder, because if you want to make money, then I think you need robust systems which are in real time, nothing lagging, nothing showing what happens 5 minutes later, nothing which explains hindsight. Everything is here in time. Everything gives you the right information. The market goes sideways, so with a touch to the upside here. Okay, ladies and gentlemen, that was a very, very nice day with my friends David and Moby in the pre-session. talked about the imbalance line. We saw the imbalance line in action. We did, or at least I did, one trade on that, and I would like to call it a day for myself because I'm totally happy to be with you, that you joined me in the session, and I hope you will be around next week. The educational session about the volume profile. Please subscribe to our site just to be informed. As I mentioned, we don't solicit, we don't send uninteresting information or whatever. We just inform you. We send out if we are doing some updates on our software, nothing else. So I hate spam, as the most of you here as well. So thank you very much for being with me here, and join our Discord room. Stay in our Discord room. I will be there a little bit later on after we finished here this session. And thank you very much as well. I appreciate your attendance. I appreciate your comments. And yes, see you in our room today, later on, and as well tomorrow. Thank you very much and enjoy your life. Bye-bye.